fantastic year for you guys so far in terms of the earnings and the stock price. And I think we should remind some of the audience that listed in London, yes, but very much a global bank, ex-Europe, ex-America. So I want to talk about Asia to begin with. Your read on what is currently happening in China. What is your read?
Well, we're also listed in Hong Kong, and that tells you something also about the importance that Asia has for us, and in particular, the China-Hong Kong Connect. And what we see in China is a slight loss of momentum lately with the latest indicators, but our understanding of the situation is that going forward, the second half is likely to be better than the first one because the policy measures that have been put in place by the Chinese authorities in terms of the tax cuts and in terms of the investment infrastructures and also some relaxation of reserve requirements, which have improved liquidity in markets, all of this is going to lead to an end-of-year growth figures which would be closer to 6.5%. So we're optimistic still on China's
What they
growth.
have done so far has been very targeted. It's been different to years gone by. Has it been enough to offset the confidence? Some people think that you can adjust the supply, the price of credit, and that's enough. Do you actually see a pickup in demand in China?
Well, I think that there has been some sort of substitution where external demand has been weakening already starting towards the end of the year. Last year, as a result of the U.S. China trade difficulties, and this has been reflected in weaker exports of China. But that has been replaced to a very significant extent also by the policy stimulus that the authorities have provided. There's been another very important component which explains why there was some slowdown in the Chinese economy, which is the actions that the authorities themselves took in order to rein in the growth of credit, particularly in the shadow banking sector. And that deleveraging has been more important during last year than trade. And now trade is getting a bit more prominence, but I think that the stimulus that is in place will allow China to end up the year in a good position regarding growth.
Are you confident there'll be positive spillover to the rest of the region? Because the divergence between, say, South Korean growth and what is happening in China couldn't be wider since the financial crisis. Do you see that positive spillover in your trade finance books? Do you see anything like it whatsoever?
Well, so far, our trade finance book has been very stable. We have not seen any negative impact of these trade conflicts on our business. In fact, China has had the best performance of all the Greater China, North Asia region in the first quarter. So what we see is that if China maintains economic growth within the range of 6 to 6.5%, and I think that it will end up the year closer to 6.5, this is something which is going to be a positive contributor to the rest of the region.
How are you managing credit risk in emerging markets right now? You guys are on the ground financing these economies. There's some people watching this operating in financial markets that are pulling back at the moment. Are you guys pulling back?
No, what we're doing is we're very careful in terms of the quality of our book. And one thing that the bank has done in the last few years is significantly improve the quality of the balance sheet, but also improve the quality of the income that we generate. So we have very strong risk management frameworks in place, and we monitor the situation continuously. And so far, what we have seen is a very significant improvement over the last couple of years of the quality of our loan book, of much lower loan impairments. And although this may go up a little bit going forward, we are confident that we will keep these things very much under control.
Jose, a final word on multilateralism and the way global politics is changing. Quite clearly, multilateral efforts are more beneficial to global banks. You can make more money that way, I believe. You're following the Chinese Belt and Road Initiative, and I imagine that kind of thing is generating a lot of interest and potentially a lot of revenue. When you move away from that, how damaging is that for a global bank?
Well, I think a retreat from multilateralism and from globalization is bad for everybody in the world, banks and non-banks. And we are a bank which is very important regarding the financing of trade. We are one of the top 3 trade banks in the world. and our business is to connect people trying to do business in different parts of the world, particularly through trade and investment. So I think that a retreat from multilateralism and globalization would be very bad news for the world, including for ourselves.
It would be bad news for you. So I'm wondering, as a final question, whether you and Bill Winters need to think about adjusting the strategy of the bank. If the trade story is not looking so great, and that's where you have great exposure, what does Standard Chartered look like in the next 5 to 10 years? Is it the same business model, or is it different?
Yeah. Well, I think that one needs to distinguish between globalization and the bifurcation of globalization. We may go to a situation where there is much less interaction between the East and the West, and much more interaction between emerging markets and developing economies themselves. And that may happen as a result of an escalation of the trade conflict between the United States and China. If that's the case, what one would expect would be a redirectioning of global trade and supply chains. But a lot of the trade that, for example, is conducted now between China and the United States will be conducted between China and many other emerging market and developing economies which are in our footprint, and between the United States, no longer with China, but with many other markets in our footprint. So I think that we are hedged from that point of view.
Jose.
So not good news for the world, but I think that we can manage, and we will.